All right, so today I wanted to talk about what is probably the most important aspect of investing in general, and that's the psychological aspect of it. In reality, understanding patterns and charting and, all the technicals and the fundamentals that go into this kind of stuff, all the in-depth details, that's all well and good. But at the end of the day, the thing that is the most important is the psychological aspect. This is from Robert Kiyosaki. Bull markets make stupid investors look smart. Bear markets turn stupid investors into losers and smart investors into winners. Markets are crashing. Time for smart investors to become very rich. Take care. So again, very good quote by Robert Kiyosaki, and that is, this is the truth, and that anyone can make money in a bull market, right? Because I mean, you can ride an index, you can ride basically any investment, right? Um, but the question is, who makes money in bear markets, right? Now, it's not necessarily, shorting the market or trying to find stocks that still go up. The real question is finding stocks that are on sale and on sale the most. And the other big question too is having the balls to hold even if you're down, 10, 20, 30, 40, 50%, whatever it is. That is the most important thing. And I think where people go wrong is that they get in for the wrong reasons. I mean, crypto is a good example of this. And what I mean by that is that whenever you're investing in, you should know exactly why am I getting into this, right? Why am I getting into this? And the problem is, I don't think people just blindly put money into stuff. Oh, it's the S&P. It's just always going to go up, or it's bonds. They're safe, right? But the reality is that um, everything is volatile, at least to some degree, right? And for every benefit, there's a trade-off, right? For every benefit, there's always a trade-off or a potential downside, and that's something that people don't seem to realize. And I mean, if you get right into it here, I mean, a lot of people say, "Oh, bonds, they're safe," but it's like not really, especially not in today's environment, right? If you look at ZAG, the Canadian bond index, I mean, look at it year to date. I mean, it's a consistent downtrend. It's down like 15%, I believe. That's a comparable number that the S&P is down. So that is also very hard too, and that you have a lot of people that think, oh, bonds are safe. But the reality is that they're not, and they're not because, well, they're not in real terms. They technically in nominal terms they are, but real terms is what matters, right? um, and they're not safe in that when it comes to bonds, especially down the road, but we're seeing it right now. One of two things is going to happen. Either number one, you're going to continue to earn a rate that is not only below inflation but probably significantly below inflation, or two, rates will go up and eventually you will earn a good rate. But the problem with that is that the value of the bonds you had before are going to go down. So there, it's a lose-lose scenario. Now, again, obviously everybody should do their own due diligence. Obviously all this stuff is just my opinion, but um, in my mind, there's no such thing as a safe investment, right? I mean, cash. There's a lot of people saying, "Oh, just hold cash," but it's like with inflation running at 8%, like I don't think it's a bad idea to have some cash, but I think you're insane to have more than normal, given inflation's running at 8%, especially if your time horizon is longer, right? Like for younger people, right? For younger people, I think that the way that we need to be going about it is a lot different than the boomers, right? Because the boomers are their goal right now is probably just to maintain their purchasing power. They don't necessarily care about making money, but I think the younger generation, we have it particularly hard in that not only do we need to grow our wealth, but we need to grow it more than any of the previous, couple generations, right? Because, I mean, if you look at the boomers and which is the one after it, I forget, they got really lucky in that, real estate, all you had, I mean, you could buy a house basically anywhere and it was going to go up, right? Especially in the bigger cities. The stock market, right? I mean, we don't know what's going to happen, right? We don't know what's going to happen. Now, again, my opinion, the opportunity of our lifetime is crypto, specifically Bitcoin, right? Specifically Bitcoin. And again, nobody knows what's going to happen in the short run, but in the long run, I mean, I think one of two things is going to happen. Either things continue to descend further into chaos and we continue to get screwed over more and more and more, or we don't, in which case Bitcoin's going to be the best performing asset, right? But again, Bitcoin very volatile as well. I mean, overall, I mean, look at just the last month in Bitcoin. We're down probably, what is that, 40%? Like that's crazy. Like that's crazy. I mean, on the year we're down even more. So again, like the biggest aspect is the psychological part of it. And personally, you have to know why you get into things. You have to know whenever you put money into basically anything now, there is a chance that it will go down 50%, right? Whatever it is, you have to know that. And if you're not okay with that, then don't do it, right? Just don't do it. Um, and again, like I say, the most important aspect is the psychological aspect. The problem is that people know that they're being too safe is also very risky, right? In that, again, if you have all your money in bonds, you're guaranteed to lose money at this point, right? If you have all your money in cash, you're guaranteed to lose even more money, right? So again, the biggest risk, in my opinion, is taking no risk, right? Obviously, there needs to be a happy medium, right? My opinion is most people don't take enough, and on top of that, the way they take risk is kind of stupid, especially the younger generation. They're putting money in Dogecoin and loading up on these you know tech stocks that they're losing money, never made money, probably never will make money. That is stupid risk. Smart risk is Bitcoin, simply because again, um, Bitcoin is very unique in that there's no other crypto like Bitcoin doesn't need any other crypto to perform well over the long run to do well. But the crypto space as a whole is clearly tied to Bitcoin, at least in the here and now. Right now, again, the one other argument people would make, oh, well, Bitcoin's tied to the NASDAQ, but it's like that's true right now, but it's only been that way for what, 6 months, right? I mean, Bitcoin went down significantly, significantly, like in what was it? When was it? Bitcoin went up significantly in the summer of. Wait, what's this going on here? So it went up significantly in the spring of 21, right? But then it came down in April and May. It came down significantly. But that was still when like the Nasdaq and the S&P weren't even close to its all-time high. So people making that comparison, it's like, yeah, but it's only been that way for like 6 months, right? So the whole point of this video is the psychological aspect is the most important part of investing. Whenever you get into anything, you need to know why you're getting into it. You need to know here's the risks. Again, personally, when I invest in Bitcoin, I know it could go down, and you need to be okay with that. You need to be okay with that. And if if you know that ahead of time, it doesn't hurt that much. And let's just say it does go down. You can't lose sleep simply because if you're investing in good quality companies, right? It's highly likely they're going to come back, and not only that, they're going to come back and then some, right? So invest in good companies and know that crashes are going to happen. There's one thing that's certain, there will be crashes, right? But if you look over the long run, right? If you look over the long run, things go up every single time they've came back. I mean, look at the S&P going back to the 1980s, right? There's been peaks and troughs, but over the long run, it has gone up, fairly consistently. So that's the thing you need to know is that every time throughout history so far, when there's a crash, it has came back. Sometimes it takes a month, sometimes it takes 10 years, but it always does happen, at least up to now. So why would you worry about something that's never happened? Technically, it's possible, but why would you worry about something that's never happened? So anyway, that's what I wanted to bring up today. If you liked the video, make sure you hit that like and subscribe, and stay tuned for more.